Here's what you need to know about student loan interest. Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. Today, we're going to tackle the topic of interest on student loans. We'll start out with a discussion of what interest is and how it works. Then I'll talk about how interest works on different types of student loans, including both federal and private options. And finally, I'll show you how the interest on student loans is calculated. If you watch this video all the way through, you'll be able to figure out exactly how much interest your student loans are accruing every single day. There's a lot to cover here, so let's get to it. Let's begin with the most basic question of all. What is interest? To put it simply, interest is a fee that you pay for the privilege of borrowing money. So if you borrowed $10,000 to pay for college, not only will you be responsible for repaying that $10,000, but you'll also be responsible for paying some additional interest fees, maybe in the range of $30 to $50 per month during the time in which you're paying that loan back. The amount of interest fees you owe every month will depend on the total amount you borrowed and the interest rate. If you borrow a large amount of money and have a high interest rate, you're going to be paying a ton of interest fees. On the flip side, if you borrow just a small amount of money and have a low interest rate, your interest fees will be minimal. There are two types of interest rates you can get on a student loan: fixed interest rates and variable interest rates. The difference between these two is critical, and it could have a major impact on the amount of interest fees you get charged as you repay your loan. Fixed interest rates are set at the time you take out the loan and will never change. Variable interest rates, on the other hand, are subject to change at any time based on the state of the economy. Sometimes when you're taking out a loan, you'll have a choice between a fixed interest rate and a variable interest rate. If you're offered that choice, there's a good chance that the variable interest rate will be lower and thus appear more attractive than the fixed interest rate. Remember though, that variable interest rates can change at any time. You could take out a loan with a variable interest rate and it may literally change tomorrow. You don't want your personal financial situation to be at the mercy of the economy. So if you need to select between a variable interest rate and a fixed interest rate, I would urge you to go with the fixed option. Next, let's talk about how interest applies to the different types of student loans out there. Your student loans are either going to be with the federal government or they're going to be with a private lender. If you've got a bunch of different student loans like I did, chances are you'll have a mixture of both. Federal student loans will always have a fixed interest rate. That interest rate is set by the federal government, and it gets refreshed and updated every year on July 1st for new loans taken out during the following 12 months. So as you can see for this particular type of federal student loan, if you originated the loan between July 1st, 2016 and June 30th, 2017, the interest rate would have been 3.76%. Between July 1st, 2017 and June 30th, 2018, new student loans of this type would have had an interest rate of 4.45%. Remember that federal student loans always have a fixed interest rate. So once you take out the loan, you're locked in with the interest rate on that loan. The interest rates on your federal student loans will never change, even if the interest rate offered on new loans changes like it does every year on July 1st. Private student loans can have either type of interest rate, fixed or variable. When you apply for a student loan with a private lender, you may be offered a choice like I mentioned earlier, or they may only offer you one option. Unlike federal student loans, the interest rate on private student loans is not set by the federal government. It's determined by the lender. The interest rate you're offered on a private student loan is based on factors like your payment history on other loans, your credit score, and the amount of other debt you currently have. If you have a cosigner, as many student loan borrowers do, that person's credit history will also be factored into the calculations. It is possible to get a decent interest rate on a private student loan, but most of the time, that interest rate is going to be higher than the federal type. For this reason, I think it's important to be extra careful when taking out private student loans. Remember, the higher your interest rate, the more interest fees you'll need to pay every month for the privilege of borrowing that money. Apart from whether your loans have a fixed interest rate or a variable interest rate, another important distinction is whether they're subsidized or unsubsidized. From the moment you take out your student loans, you start to get charged interest fees, even if you're not making any payments because you're still in school. This can turn into a big problem, especially if you take out a large loan during your freshman year of college. If you allow that loan to just sit there and gather interest fees for 4 years while you're busy studying and taking exams, the amount you'll owe on that loan when you graduate will be significantly higher than when you first took it out. Thankfully, the federal government offers something called a subsidized loan. For subsidized loans, the federal government pays those interest fees for you while you're in school. This way, when you graduate and begin to pay that loan back, the total amount you owe on the loan will be equal to the amount you originally borrowed. There won't be any interest fees added that have been piling up while you were in school. The only downside with subsidized loans is that there's a limit to how much you can borrow, and most of the time, it's not enough to fully cover the cost of college. So you're stuck with unsubsidized federal student loans and private student loans, which are inherently unsubsidized as well, to make up the difference. Last but not least, I want to show you how interest on student loans is calculated. The good news is, it's pretty simple. The bad news is that knowing how much you're paying for interest fees every month or even every day might make you feel sick to your stomach. For our example, let's say I have a student loan with a balance of $20,000 and an interest rate of 4.5%. The first step will be to convert my interest rate from percent form into decimal form. To do that, just divide by 100. So I'll take 4.5% and divide by 100 and I get 0.045. Now that I've got my interest rate in decimal form, I can use it to calculate the interest fees on my loan. If I multiply my student loan balance by my interest rate, I'll get the amount of interest fees I'll need to pay over the course of 1 year. For my example, I'll take $20,000, multiply by 0.045, and I get $900 per year in interest fees. So on a $20,000 loan with just 4.5% interest, I'm having to fork over nearly $1,000 a year in interest fees. Ouch. How about monthly? I take my $900 per year and divide by 12 months, and I get $75 per month. What about daily? Again, I'll take my $900 per year and divide by 365 days. The answer is $2.47 per day in interest fees. That's like going to Starbucks every single day and ordering a large coffee. Back in 2018, when I first got serious about paying off my student loans, my total balance was over $175,000, and I was stuck paying over $750 per month in interest fees. Knowing that so much of my income was going to interest fees every month made me upset, and it motivated me to do everything I could to become debt-free and never pay another penny on student loan interest fees ever again. Maybe this knowledge will have the same effect on you. How much interest fees are you paying every month on your student loans? Let me know in the comments. If you have student loan debt, you might be interested in this other video I made where I present 3 strategies to get rid of your student loans more quickly. Click right here to watch. And if you enjoy what I do here and want to support my channel, click right here to become a subscriber. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.